The markets are entering a critical phase, and the signals are building fast. Volatility is quietly creeping higher, setting the stage for possible turbulence. The dollar index is testing support and might be carving out a bottom, while yields seem to be catching their breath before the next potential surge upward. In commodities, natural gas is flashing signs of a pullback after its powerful rally, gold is triggering an early alert with rising risks, and oil stays locked in a bearish trend, though a pause may be on the horizon. Meanwhile, the S&P 500 attempted a recovery, but failed, and technical suggests that downside pressure is far from over. We'll also analyze the state of the S&P 500 sectors, major players like Apple, Microsoft, Tesla, and check on Nasdaq's short and mid-term prospects. And don't miss today's special feature. We'll take a closer look at Meta and its critical levels that may define its next major swing. Subscribe now and join us as we break down the charts and map the waves while the markets prepare for the next big move. This is the volatility chart. And the closure today is obviously bullish. The candles, bearish candles that were volatility tried to form yesterday were negated technically, and by closing above the high of yesterday's. And if we look at the moving averages, for example, we can see a strong bounce here for F50, decided to go higher over 100. So technically this is a strong bullish move. And well, if we look at the bigger frames, so the two-day frame, however, it's somewhat neutral because it failed to close above the high. And the only concern here for volatility, I would say that the candles, both candles, closed strongly above Bollinger Bands, and this is viewed as a potential reversal signal. However, it's not as strong as it would be if we had, for example, a strong bearish candle like bearish engulfing or belt hold or something like this. So volatility is bullish for tomorrow. However, we have to keep in mind it's overbought conditions and trading above Bollinger Bands. If we look at the chart, volatility chart, we tried to share on February 28th. This is technically the Elliott Wave. However, what we are seeing here is that if the first wave was impulsive, clearly impulsive, then the second wave, and I would say that B probably get here. So wave B from here is corrective, and at best it could be an ending diagonal, expanding ending diagonal, and I'm talking about this particular possible formation. So if we see a strong move downward tomorrow, it would be a completion of a diagonal, and in this case we might see a big reversal. So far the waves, the ABC formation is kind of ideal from the Fibonacci perspective, and it would be very reasonable to expect one more higher high and then a big and strong move down. Well, that's the perspective. Let's keep this in mind. Now let's have a look at the dollar index. Dollar index potentially formed a bottom today. So this is this inverted hammer. It's totally below Bollinger Bands, and the conditions are oversold. And what we are seeing here is that multiple smaller frames are also oversold and diverging. So the chances for a move higher tomorrow are fairly high, although it might take a while, couple of days, maybe even weeks before the bottom is formed. That's the perspective. If we look at the chart that I shared yesterday, this was potentially an impulse, and I would say that the last wave here was kind of an ending diagonal, expanding ending diagonal. Before everything before was clearly impulsive, but the last wave. So, and if we look at the wave that dollar is forming right now, so this is the bottoming wave, we can break it into an impulse. So it's it could be something like this: 1, 2, 3, 4, and 5. So each of the subwaves is clearly breaking into 5 subwaves. We now we have a very sharp and strong zigzag potentially for wave 2, and another impulsive wave here. So if the dollar continues on with in this fashion, that would be technically a reversal. Well, that's the potential, and if we look at the candles are also telling us that they don't mind to be reversed at this moment. That's the perspective for the dollar. Now let's have a look at the bond market. So what we are seeing here, it's an interesting story. So after technically confirming a bottom yesterday on a daily frame, 10, 20, and 30 years, the yields took a pause, and actually it's good that they formed the red candles here, because if they formed the green ones, it would be stronger bullish for a bearish formation with a big potential of reversal. So now this kind of a this is in neck on neck pattern with a doji, with a good chances to continue higher tomorrow. And an interesting thing that the 2-year yield is forming a bearish engulfing, so they will be moving in the opposite direction here, and that's kind of provides a relief. If we look at the 10-2-year yields, so we were thinking at a couple of weeks ago, that it would be a reversal, and it looks like right now, this is the weekly frame which is closing tomorrow. It looks like the spread will be forming a tower bottom here with a potential of moving higher. And I circled here a possible 50 over 200 bullish golden cross, which the spread would make not this week, but probably next week. And this would be a very strong and long-term signal. So the chart here might need to be adjusted, because this looks like it's going to be an impulsive wave. We just need one more higher high. Well, that's the spread and the bond. Now let's have a look at the 10-year yield more closely. What we are seeing here, this we already discussed, this potential in neck pattern, which is viewed as a bullish continuation. Technically, this is not confirmed as a bottom on a 2-day frame, but the odds are definitely bullish after this bottoming doji. The yield forms a strong bearish bullish engulfing. And the 3-day frame, which is closing tomorrow, has a very good chance to form an even bigger bullish engulfing if the price stays at this, if the rate stays at this level or moves a little higher. So this is the perspective. Everything looks bullish at minor frames. Now let's move on to the chart that we discussed yesterday. This is a 20-year yield. What we are seeing here, potentially forming an impulsive wave. Whether it's gonna be wave 1 here of a bigger impulse with a pullback to form wave 2, or this could be wave 3 that is right now forming. So, but it would need to move higher, possibly somewhere right here. Well, that's the perspective right now, and we are monitoring this on a daily basis. Now let's have a look at TLT. TLT is an interesting, very interesting position. So technically, it invalidated the bigger impulse. However, it still has a chance because it didn't cross this line, and the impulsive wave C, this one, it could be here, for example. It can move a little higher. This what I would be looking for, potential for wave alternative C, and if we put the wave, it would be 1, 2, 3, 4, and 5, somewhere here. So obviously this would be alternative A, and so far everything is aligned. That's the perspective, but I'd like to emphasize, as soon as the TLT crosses this line, it will invalidate this impulse and the bigger impulse as well. So that's the perspective. And if we are looking for bullish perspective for the bonds tomorrow, so perhaps the chances for an invalidation here are slightly higher than for the opposite move. And if we look at the candles today, so after forming strong confirmation on a daily frame and that big bearish engulfing on a two-day frame, TLT moved lower and formed technically an impulse, a neutral, somewhat neutral doji with a bearish flavor. The chances to move lower tomorrow are fairly significant. And tomorrow is a weekly closure. If TLT forms this type of candle, this would be a bearish harami with a good chance to continue down. But I would like to see it a little lower. Well, that's the perspective for TLT. And now let's move on into our commodities section, and we'll start with natural gas. This is the candles today. And it pulled a little bit because when I was preparing for this call, this was a bearish engulfing. Now it is dark cloud cover, closed as a dark cloud cover, just a few basis points above yesterday open. So it's not as strong bearish as I would thought. Yes, and now if we look at the two-day frame, it's also not a strong, very strong harami cross, so it could be a bullish continuation. And the weekly frame, which is closing tomorrow, so far is on track for a bullish closure. And I'd like to emphasize this is going to be above 200 weeks moving average, and this is a fairly freshly made 50 over 100 weeks moving average bullish cross. And if we speak about potential targets, this is a very big chart that we shared back in November, and so far it formed an inverse head and shoulders, and the moving here, this is the target, this is the long-term target, and the short-term chart we will share today later on in our daily update for natural gas for energy subscribers on the investingangles.com. Now let's move on to the next commodity, and this is gold. I think we have a very unfortunate news for gold investors. This is bearish engulfing after a formation that we discussed yesterday. It's an advanced block. So the chances for gold to move lower are fairly significant. And if we see a tomorrow bearish closure, bearish candle, especially if it closes below today's low, it would be a very strong confirmation of reversal. And I would like to say something about the weekly weekly was a bearish engulfing last week, and this time tomorrow will be closure of this candle, and if it so far it is somewhat bullish, but it's not enough, it's not sufficient in order to negate this candle. So if it moves a little lower, then the bullish odds will be diminished definitely. And the 15-day frame, which is closing tomorrow, technically this is a neutral candle with some bearish flavor, but in order to make it bullish, it needs to rally about 2%. Well, whether it's doable or not, it's still the question. But the chances of a move lower tomorrow are fairly high for gold. Now let's have a look at the silver. Silver chart is technically the same as we discussed it last time. While I mentioned that this is, but the first wave here was impulsive, then that the current wave here is not, because of numerous overlaps. So we are seeing like a big overlap here, and these are not a healthy signs for an impulsive wave, particularly for wave 3, which we are expecting to be developing here. So the chances for either red or blue count would be higher, and particularly for tomorrow. Tomorrow would be a very interesting closure, especially on the weekly frame. Let's tune in for our weekly update over the weekend. We will be discussing it in details. Now let's move on to oil. Oil is technically bearish, and the candle today was somewhat neutral. Perhaps we might see a bounce tomorrow, but if we look at the bigger frames, they are closing bearish. So this is the weekly frame. We have a MACD cross, bearish MACD cross, and this is the weekly candle so far. I would say that tomorrow gold has a very big target. In order to make this candle bullish, it needs to rally about 6.5%. I cannot say it is impossible. We had bigger candles than that in recently, but we'll see. That's the technicals are not very supportive of this type of move at this moment. And if you look at the Elliott Wave chart, this is the one that we've been tracking since February 20. So February 24, oil was 71, and it lost over almost 7% right now. So what we are seeing here is potential 1, 2, 3 wave formation, and this is the flag, bearish flag. If it materialized here, so this wave is corrective so far. If this flag completes, then this is the 662 is the approximate target for the flag. So, but it's still, I think it is still developing. So we have to be patient. And now if we look at the Brent is also bearish, no questions about it, and it's even stronger than WTI. So on the monthly frame, we have 3 black crowns here, and after a strong bearish engulfing on the monthly frame in February, March is developing so far in a very bearish fashion, and I'd like to point that it already broke through the 100 months moving average, which is a very strong one. Where, however, we might see before the end of the month, we might see a bounce here, perhaps trying to recover from it. And before we end this oil section, if we look at Exxon, Chevron, and ConocoPhillips, an interesting formations here. So this is a very strong bullish engulfing, and I would expect Exxon rally tomorrow. The same for Chevron. Conoco is kind of neutral, but the candles are, this could be a 3-star doji. And if we see a reversal tomorrow, it wouldn't be very surprising, especially if we consider Exxon and Chevron's formations. So be prepared for tomorrow. This could be a rally. Now let's move on to the indices. Indices closed today with technically bearish continuation candles. However, I would like to say that they were not extremely strong because they failed to close at the lower low. And the support here for S&P 500 at 200 days moving average could be significant for tomorrow. So Nasdaq broke through the 200 days moving average, and Dow Jones and Russell, they formed doji, which didn't negate entirely the bullish engulfing that they formed yesterday, but at the same time they obviously they didn't confirm it either, so they're likely neutral, and we need to see tomorrow's move. That would be crucial for the indices. If we look at the futures, so futures technically showing the same picture. They're bearish for S&P 500 and Nasdaq, and somewhat neutral, bearish for Dow Jones and Russell. If we look at the weekly frame is targeting a strong bearish closure unless there is a very strong rally tomorrow. That's what candles telling us. This is the biggest, larger frame for S&P 500 midterm chart, and we discussed yesterday that S&P 500 still had a chance to form a 1, 2, 3, 4, 5 an impulse if we consider the bottom on August 2024. So it would be the last chance. If it breaks through 5669.75, it will be an invalidation of this impulse, and technically we would be looking for lower prices, and this would be a red path. If we look at the smaller frame, smaller chart, potentially right now S&P could have formed an ABC formation, and this last wave here is not entirely impulsive, so it could be a diagonal, by the way, and I'm thinking about this one potentially. So this because of the overlaps and everything, so it could be 1, 2, 3, 4, 5 ending diagonal. And if we see a very strong move tomorrow, this is probably it. And the ABC for the first wave down, but we would be looking for more corrective actions. And obviously if it makes lower low, we would be considering a bigger impulse. However, the structure of the wave is not clearly impulsive. I have many questions about it. So the next chart now, let's discuss Nasdaq at the same time. So Nasdaq made a major damage today, major technical damage from the perspective of Elliott Wave. So it moved below this line that we discussed yesterday. The low of today was 20,003, which is 22 points below this line, or technically a break. And now the only way it can complete this wave and make all-time high is by completing an ending diagonal, which would be this one. 1, 2, 3, 4, 5. So it is still possible. We cannot reject this. We cannot reject this opportunity here, but at the same time, there is also a chance that this was 1, 2, 3, 4, and 5. This was wave 5 of for the wave that started in October 2022. So if this is the case, we would be looking for Nasdaq to move somewhere in this area. This would be the most typical targets for the retrace. So now we have a Nasdaq with a big dilemma, which path to take. Both are corrective. I think that tomorrow we'll know better after the weekly closure. If there is no reversal, then we will be looking for and targeting somewhere here, but obviously looking at the minor frames. So far, so this is the chart that we discussed yesterday. So this impulse didn't work. The only thing right now, Nasdaq could try to form this type of impulse tomorrow, as this wave, if we look at A, B, C in the red counts, this wave is also corrective, and the chances that it is at ending diagonal are somewhat significant. So this is the possibility. Let's see how it works tomorrow. And now let's have a look at the sectors. What sectors are candles of the sectors are telling us? First of all, I'd like to say that yesterday we had fairly bearish one, but today the candles are not that decisive. And these candles, let's say for financial, for technology, they are not looking very bearish compared to yesterday's. Yes, we have some technical, very strong technical signals like 50 over 100 days moving average cross for technology, but well, it can continue moving here and we can see a bounce up to the cross. Industrials are trying to form a bottom here, trying to hold on the 200 days moving average. Staples, consumer staples are somewhat neutral with a chance of moving bullish. Utilities broke through the 200 days moving average and they are bearish at this moment. Healthcare, I would say it's more bullish than bearish. And consumer staples are somewhat neutral because they were not able to close at a new lower low. And energy, no surprise here. So energy is bullish, very strong bullish engulfing over the doji. And remember, we just discussed Conoco and Exxon and Chevron. So they are the biggest contributors here. And speaking about the larger stocks, so Microsoft, after forming a bottom, it pulled back a little bit, but it didn't negate anything. So if we look at the 2-day frame, so it's technically very good chance after bullish engulfing here to continue higher. Amazon, unfortunately, it's neutral, somewhat neutral, leaning bearish, but it might get a strong support at 200 days moving average. So similar things for Nvidia, it's not entirely bearish, so it's closer to neutral. Google was trying to form a bottom and it might succeed tomorrow. Tesla is somewhat neutral bearish. Again, we would need to see a closure tomorrow. And Berkshire is, as I discussed yesterday, it is forming a horizontal candles, maybe a few more, and it will continue down. On daily frame, it's kind of neutral bearish, but if we look at the weekly frames, so weekly are not looking good for Amazon, for example, and for Nvidia. the weekly frame are very concerning. The same thing for Meta, but Meta is our special feature. We'll discuss it right now in a couple of minutes. So that the perspective overall is more bearish, but leaning to neutral. So tomorrow will be a decision day, big decision day for the weekly frames. And if we don't see a strong rally, then most likely the closure will be bearish, and the chances for a continued move lower will elevate. And the final discussion of today is Meta. What we are seeing for Meta is bearish candle on the daily, inside down, and on 2-day frame, which is closing tomorrow, very good chance for a bearish formation. And 8x20 EMA bearish cross can happen also if we see a move down. So far, the weekly looks bearish. Unless we see a strong bounce tomorrow, this is going to be a bearish closure. And for Meta, this is our chart that we've been tracking for exactly a month. On February 6th, we shared this one, saying that Meta has a very good chance to complete an ending diagonal, perhaps a double ending diagonal, and drop strongly towards 583 level. So far, it's down 15% of the top, and it is approaching the level that we discussed. Well, that's for Meta so far, and tomorrow it will be decision day. We'll see how Meta behaves. Maybe it has a chance to recover and not hit this level. To summarize, with volatility building, the dollar bottoming, and yields preparing for another push, the next market shift may already be underway. Gold's early warning, natural gas pullback, and oil's continued weakness all add to the pressure, while SP500 and Nasdaq hover over critical levels, still favoring further downside. We'll continue tracking every key signal in our daily market waves report, helping you stay informed and ahead of the curve. Join us at investingangles.com for premium insights, Elliott Wave forecasts, and real-time coverage of major indices, commodities, and stocks. Don't forget to like this video, share it with fellow traders, and subscribe to our channel so you never miss the next critical update. Thanks for watching, and as always, happy trading.